Bloomberg Audio Studios.
Podcasts, radio, news.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
One of the names Abigail was talking to us about was Boeing. And we want to figure out, are these folks going to be getting back to work? Because they need planes to come off the line. They need the cash flow. They need to get folks back to work. George Ferguson covers all of the aerospace, all of the defense, and all of the airlines for Bloomberg Intelligence. So, George, it seems like the union's representatives have agreed to a deal with Boeing. What do you think the actual workers are going to do when they vote?
So I think we're getting closer. Look, I think 35% is the increase over 4 years. It's still, I think, some of the other union agreements we've seen in the marketplace. Like the port workers. But I would note that Textron had a similar strike by its machinists out in Wichita, Kansas. I'm not sure if you get through there very often, Paul. We're aware of that, but. They just came back they agreed to come back to work. It was kind of a sub 30% increase over 4 years. So my guess is, that the shore workers probably, or the port workers probably set the high end of the mark. These Wichita machinists for Textron probably set the lower end. Boeing probably lives somewhere in the middle. The 35 sounds about right. Workers have been out on strike for about a month now, right? So my guess is that finances are probably starting to look challenged at some of those households. I think Kelly Ortberg, pulled out hey, we're going to raise $25 billion in cash and we're ready to go the distance. So I think those combinations, and then throwing some of the 401k money at them, right? There was some plus-ups on how much they would match in 401k. I think some initial, incentives on the 401k. I think they're pretty close, although I note that the union leadership wouldn't endorse it from everything I've read. They're just passing along this offer from Boeing to the workers, for a vote. My guess is this is pretty close. I think they might make it here, but I guess we'll get a chance to see by Wednesday, how cranky the union is and how much more they want. But it seems like it's pretty close.
George, how important is an end to this strike for Boeing and just broader sentiment there? I mean, shares are down about 39% year to date.
Yeah, it's huge, right? I think if it doesn't get agreed to, I think Boeing almost needs to raise money anyways. I guess it might help them decide what amount of cash they need to raise. I'm hearing stories that the supply chain's still building at the rates prior to the strike. Components are stacking up on their, on their loading docks. I think the longer it goes, the harder it is to restart the line, the longer it takes to restart the line, and the longer it takes to generate cash. And I think Kelly Ortberg would prefer not to go to the equity markets for a lot of money, and prefer not to have to draw down any additional debt. Not that they've said they would do that at this point. So it's very important for the turnaround. And again, timing is crucial to keeping the supply chain, I think, healthy and ready to go.
George, talk to us about, I know in the past you've educated us about the cash and how the cash comes in and cash leaves a company like Boeing, and it's tied pretty tightly to those 737 jets leaving the floor. How quickly can they restart it, and where do you think the build modes for that 737 jet will be, and where do they need to be?
Yeah, so I mean, they need to get that jet up into the mid 40s and 50s. I think it's going to take them. I think even if the strike ended today, I think they're not going to hit sort of the 40-ish. Their target was 38 by the year end. I don't think they're going to hit maybe a 40-ish level until mid-year next year. They ought to be driving up towards 50. Maybe hopefully by the end of next year if the strike ended relatively soon. By comparison, Airbus's competitor airplane, the A320, that's being built right now in the mid 40s. They're driving higher into the they hope to be driving higher into the mid 60s, I think, over the next year or so. It hasn't gone as well for them as they'd like, but their competitor product is doing much better. That is the cash cow for the company. Defense is really, back on its heels right now because of some of these big fixed price contracts they signed that are out of water, which makes it that much more important to get the 737 rolling off lines. And just, I think, an interesting point of comparison, if you look at Boeing's inventory level, last time we saw it at 2Q, $85 billion of inventory on their balance sheet. Their competitor Airbus was in the mid 40 level billion dollars. So you could tell that's just an example of how bloated that inventory level is and how much they can unlock as they start to deliver airplanes. But again, 737 is the key to that. And they want to keep market share in that airplane too.
Speaking of market share, I did want to get your take on how investors are thinking about Boeing. I mean, of course, it's had a really troubled year when we think about 2024, but as you mentioned, they have Airbus as a competitor, but not too many competitors out there. So how do investors think about this when they're thinking about Boeing and its longevity?
I think some of what you've seen today in the stock price gives you a sense. Investors know it's a duopoly. And look, we've been doing some work recently on the backlogs. And if you looked at Airbus's backlog for the competing airplane, the A320 I was just talking about, competing to the 737, we think it's probably 10 years of backlog on that airplane right now, right? So even if you stepped into Airbus's sales office, I'm sure it doesn't go, all the way full out for 10 years because there's some airlines that'll come in and order out for a decade. But you're probably into the 2030s before you get that airplane. So when you're thinking about Boeing and you're thinking about the market share risks around this strike and the problems they've had, at least right now, if you want an airplane, Boeing, is probably your best place to buy a narrow-body, single-aisle airplane, the 737. So it's not like anybody's walking away with this business while Boeing's having their problems. I think investors know that. The Chinese are coming, the COMAC, the C919, that's a narrow-body, single-aisle airplane like the A320, 737. That's just rolling out into fleets in China now. Last we looked, I think there was 8 or 10 of them. They don't get the service out of them per day that Boeing and Airbus do. They get about half. So they're still they're still coming up the learning curve, learning how to support that airplane in the marketplace. So that's no replacement yet, but that will move in size inside China in their fleets. That's been a very important market for Boeing and Airbus. And then it'll start to expand into that developing world around China. Boeing and Airbus, I think, would really like to get, they'd like to build at the highest rates possible, build their cash flows, and come out with successor products in the 2030s and 40s that stay ahead of the Chinese and keep them from taking significant market share. But again, going back to your initial question, it's still a 2-airplane builder world. We don't see Embraer really getting into this business right now, the narrow body, the larger commercial aircraft game. So it's really still a 2 manufacturer business, and investors know that. And I think that's what's leading to some of the action today.
Well, I can see the fleet aging right before my eyes. I flew back from Charleston last week. Alex Steele and I did, and the 737 still had like the old card reader to get a TV show. I mean that's like 20-year-old technology.
Very archaic.
So I told, I blame George for all that. He's got to get these people back to work. George Ferguson, thanks so much for joining us there. George Ferguson, Senior Aerospace, Defense, and Airlines Analyst. He's our go-to person on all things as it relates to aerospace and airlines. He's at Bloomberg Intelligence down in Princeton. But it just seems like, you think about, I can just see all the stuff coming into the Boeing factory to make the plane and just sitting there and piling up, and because the line, the construction line, the manufacturing line's not running. So,
and I wonder how many people are still looking at what plane they're taking for flights. As you remember, months back, things were falling apart and people were apprehensive. They were nervous about getting on Boeing planes. So I'm curious how many people are still shopping around when it comes to flights there.
I never did that. And I always felt like you did.
Guilty as charged.
Okay, because I feel like the 737 MAX is now the safest plane of all time because it's gone through so much testing and review. But I don't know. I mean,
What can you do?
Yeah, any of the U.S. airlines or the Western airlines, generally speaking, the safety is what it is. I think we feel pretty good about that.
Right.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Let's turn back to the U.S. markets here. Again, the S&P kind of down about 5 points, Dow off about 145, and NASDAQ up 25. We checked in with Phil Orlando, Federated Hermes. He is our go-to guy as we think about some of these markets. He's the chief U.S. Equity market strategist and head of the client portfolio group there. Hey, Phil, I don't know if you saw this, but Goldman Sachs out with a note saying, if you think about the S&P over the next 10 years, think about low single-digit returns as opposed to what we've seen over the past 10 years, which have been much better. When you see a note like that, how do you kind of digest that?
Well, I mean, Goldman's probably right. We've had such a phenomenal recovery in equities coming out of the depths of the pandemic, 4 years ago, 4.5 years ago, and just over the last year or so, that how much of this is borrowed from the returns that you might expect over the next decade. So Goldman, adjusting their capital market assumptions and saying, mid-single digits over the next 10 years probably feels right, particularly in light of the fact that we're, sitting here with $36 trillion in federal debt and a total debt to GDP ratio of 125%. Those numbers aren't sustainable, and you've got to believe that at some point Washington's going to find religion on trying to step away from the sugar high that we've seen over the last couple of years with all of this massive amount of spending. That'll have potentially a deleterious impact on economic growth and ultimately equity prices. So directionally, I don't disagree with what Goldman said. The case for active management, though, is that what you want to do is you want to find good firms, good managers, good products that can do better than the average, those top quartile performers that will help you generate the returns that you need for your college funds or retirement funds or whatever else.
Well, Phil, let's talk rates. Of course, we just got that jumbo rate cut, just what felt like yesterday, and then here we're turning and we're going to be having another meeting in a matter of weeks. What do you expect to come out of that meeting? Of course, I know as you flagged, just a month later after that last cut, we're seeing an economy that could be seen as reaccelerating and a labor market that has strengthened. What does this mean for markets? Do we see a rally continuing after this next meeting, and what do you expect from the next meeting to come?
So to take a half a step back, we were surprised by the pace of the 50 basis point rate cut that the Fed gave us in September 18th. We think that the Fed needs to sort of get back to that quarter point level, November 7th, December 18th, and then looking out over the next year and a half, a quarter point cut per quarter, and that would take us down to a terminal value of the funds rate, let's say by the middle of calendar 26 of about 3%. We think that's a reasonable pace. And then to your point, given the seeming reacceleration that we've seen in the U.S. economy over the last month or so, and sort of the sticky nature of inflation, and the fact that the labor market in September was actually surprisingly strong, Raphael Bostic, for one, the president of the Atlanta Fed, made a comment, I guess it was last week, where he said, you know what, maybe we should just skip November and come back in December and see where we're at. So our view is that the 50 we saw in September was probably a little too aggressive. And given sort of the tone of the economic data we've seen over the last month or so, ratcheting back to a more conservative quarter point pace is probably more realistic.
Phil, we're just starting to get into the real teeth of the earnings season here. What have we seen so far from the big banks that have reported, and what do you think the market needs to see earnings-wise from corporate America?
Well, the earnings haven't been bad. We're probably up 4% or so year over year, which is fine. We're probably going to end up beating expectations as we usually do. But importantly, the earnings season is going to be slower than the 11 or 12% year-on-year earnings we saw in the second quarter. And I think that's consistent with our soft landing thesis. We're not going negative. We're just going to slow down to sort of a trend, a pace that's above zero, but nowhere near as hot as the double-digit pace that we saw in previous quarters.
So expectations for this earnings season are low. Does that support a further rally when we're looking at equities more broadly coming out of this earnings season?
Well, we've seen a backup in Treasury yields from 350, 360. We're up to, north of 410 now. Remember, price earnings ratios are inversely proportionate with the direction of inflation and interest rates. So the backup in yield suggests that price earnings ratios should be contracting. Yet the stock market hit another, all-time record high last week. You've got stocks trading, the S&P trading at a forward multiple north of 21 times on next year's earnings. We're estimating $275 for the S&P next year. Yet the appropriate PE on stocks, given where Treasury yields are, is probably south of 18 times earnings. So you've got a valuation gap right now, of about 20% in round numbers. In my mind, the market's extraordinarily enthusiastic here. It's looking through and discounting very favorable Federal Reserve behavior, very favorable election results, very favorable trajectory of economic growth and inflation.
Right.
There's a lot of enthusiasm built in here that, maybe we ought to see a little bit of a pullback.
All right, Phil, thanks so much for that. We always appreciate getting your thoughts on these markets. That's Phil Orlando. He's the Chief Equity Market Strategist and head of the Client Portfolio Management Team at Federated Hermes, zooming it in there from New York.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
Norah Mulinda sitting in for Alex Steele. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker studio. We are streaming live on YouTube as well. So head over to youtube.com, search Bloomberg Podcast, and that's where you will find us. Tensions in the Middle East, the military conflict in the Middle East, still front and center for markets. We'd like to get some smart internal voices as well as external voices. And that brings us to our next guest, Ned Lazarus, Associate Professor of International Affairs at George Washington University, joining us via Zoom from Washington, D.C. Professor, thanks so much for joining us here. I'm just not sure what next steps are there in the Middle East. I guess one of them is what or how Israel will respond to the missile attack on Israel, as well as, I guess, a potential attack on Netanyahu's home. Where are we in that discussion?
Well, you're quite right. This is a multi-front war now, with multiple active fronts, with Israeli troops fighting in Gaza for over a year, now fighting on the ground in southern Lebanon, as well as continuing airstrikes north to the Dahia neighborhood of Beirut, which is the Hezbollah stronghold. We are still seeing missiles fired from Iraq, from Yemen, from around the region, and we are waiting to see what will be the Israeli response to the second massive Iranian missile barrage on Israel. We also, as you know, there was a recent leak of potential Israeli target plans that was leaked from the United States. I believe there's now a secret meeting going on, or a top secret meeting going on in Congress to discuss what happened and try to identify the source that seems to have leaked to the Telegram social media app Israeli plans that were shared with the United States. And it's possible that that source has more documents that may come to light as well. So that may throw a wrench in Israeli plans if the plans that were leaked are accurate. It's all unclear. As has been the case throughout this war. The only things that seem to be well known are that Israel intends to strike back at Iran, and that there has been tremendous amount of coordination and discussion with the United States, given the sensitivity of our electoral calendar with our election coming up in just over 2 weeks.
Well, as you mentioned, we do have a presidential election in just a matter of weeks, and the U.S. is hopeful for a ceasefire before then. And it's been reported that the Secretary of State, Antony Blinken, is set to visit Israel, among other countries in the area, starting today. And this will be his 11th visit in the region since last October. Can you speak a bit more about how the U.S. is playing a role?
Blinken is headed there. Amos Hochstein, the president's special envoy, who has been back and forth between Lebanon, Israel, and Washington for months, is there again this week. They're making every effort to, I think, at least keep it from spiraling further out of control. And to try and manage Israel's responses in line with U.S. interests. But they certainly cannot control events. As we've seen, events there, are beyond anyone's control, and even include surprises such as the killing of Hamas leader Yahya Sinwar less than a week ago, who was killed by Israeli regular infantry troops who did not know that it was him. And this is a massively important event, which may eventually help turn the course of the war. I do not expect a ceasefire before the U.S. election. There is just simply too much going on. It's too escalated of a conflict at the moment. As you said, we are waiting for Israel's response to the Iranian attack. It is possible, not unthinkable, that Israel would delay until after the U.S. election, but I would say that seems less likely. And once Israel responds, then there will be an Iranian response. Mm-hmm. So a ceasefire, a total ceasefire on all the fronts is not in evidence. And I think probably the Biden administration is aware of that and is making every effort to keep this from, again, spiraling out of control or escalating in a way that is contrary to U.S. interests. Right. The U.S. has set up a special air defense battery, the THAAD missile battery, which Secretary of Defense Austin has announced is now on the ground in Israel. He didn't say whether it's operational, but obviously that's the plan, and I assume that it will be shortly. And that's to help defend against further Iranian missile attacks.
What are the end games for Israel now? Just in a year, it's gone from the initial strategy of neutralize Hamas and get the hostages back to I don't know what it is now. Have they articulated what their end game is here on this much broader front?
Well, I think there are two levels to this. So one is the Israeli defense establishment, the state, the broader strategy, and one is the Prime Minister Netanyahu, who has his own political interests, which may well be guiding some of his decisions and often put him at odds with his own defense establishment. I think that in terms of the broader Israeli interest, I think that right now Israel has been on the offensive after many months when it seemed that victory was, a ridiculous idea and that things were not going well from an Israeli military point of view. Israel has been on the offensive. It's dealt severe blows to Hezbollah and to Hamas. And it has, with help from the United States and regional allies, absorbed two massive Iranian attacks. Israel has killed, the leaders of Hamas and Hezbollah. So this has actually been, from an Israeli military point of view, the most productive period of the war. And I think that a goal is really to damage Hezbollah and Hamas as much as possible before the U.S. election. I do think that they're sensitive to our electoral calendar, and looking at that and thinking that after that election, they may need to recalibrate. And so they're trying to get all the blows in they can before that.
Exactly. All right, Ned, thank you so much for joining us. Ned Lazarus, Associate Professor of International Affairs at George Washington University, giving us the latest out of the Middle East, a broadening conflict that we've witnessed over the past 12 months.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Norah, Mulinda, sitting in for Alex Steele. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio. We are streaming live on YouTube as well, so head over to youtube.com and search Bloomberg Live Radio. Our next guest has been traveling all over the place, Dubai, Berlin, so we're going to get some fresh color about what's going on in global Wall Street. Ann Berry joins us. She is the founder and managing partner of Threadneedle, joining us live here in our Bloomberg Interactive Broker Studio. Dubai, a bunch of technology people. What were you doing in Dubai?
Well, it was the world's biggest tech and investor startup conference. Unbelievable scale, 6,500 companies, 200,000 tech executives, and really leading a lot of the conversations around AI. Is it hype? Where are we in terms of cybersecurity and applications of AI? So, Paul, it was just a really interesting way of seeing where the energy around tech is going, and more specifically in the rest of the world, not just US entrepreneurs, but really getting a sense, what's the Middle East doing? What's Asia doing? And how is policy and government action meeting the private sector?
Sticking with tech, you're focused on the private side, I know you mentioned, and recently invested in a software business that's focused on streamlined contractor assessments when they come to your house to put in new HVAC systems. What are you seeing there? Can you talk a bit more about that?
Sure. Well, Norah, I look at the tech sector a lot and talk about stocks a lot here at Bloomberg, and I've recently been getting worried with the rallies that if I thought that it was getting a little thin in terms of the air out there valuation-wise, it's even more the case over the last couple of weeks. And so I've been looking a lot more at these sort of niche software as service businesses where people like the ServiceNows of the world, which is a terrific company, but extremely expensive if you look at the multiples in that business right now, where that could be the acquirer of choice as it looks to roll up some of these niche businesses. So that's the kind of place I'm looking at. HVAC, I'm a believer there's a big CapEx replacement cycle coming as global warming continues. And those kinds of businesses, I think, will win over the long term.
So, Ann, at this tech conference in Dubai, talk to us about kind of the discussion around regulation, because just historically, the last 50 years, the U.S. has held a relatively light touch on regulating the tech industry, and one could say that was maybe the reason why Silicon Valley is Silicon Valley. You can't say that about Europe, broadly defined. How do they think about the next wave of technology? Do the Europeans, or maybe other parts of the world, Asia, do they think differently about regulatory control?
I think quite differently. I think there's a core part of commonality, though, and I think the core part of commonality is looking at how technology is going to impact national security. I think if you look at that specific point, the US, Europe, the Middle East, Asia are all aligned, which is trying to make sure that tech flourishes but doesn't pose as much of the risk that we fear when it comes to national security. That being said, you're right, the EU has been leaning in terms of AI regulation. What I saw in the United Arab Emirates and what I've seen in Singapore too, actually, is quite different. And it's less about regulation, it's more about government partnership with the private sector. In both of those nations, there's a really concerted effort by government agencies to spend their money with startups and to take the risk on businesses that otherwise don't yet necessarily have the credibility or the track record to win those government contracts of their own volition. And they're leaning in to try and take them. They will take some of the tech risk, but will enable them to flourish as a result. That I haven't seen quite so much in the US.
Right.
No.
How are you thinking about energy and secular consumer growth? What's the play there? I mean, let's talk Southeast Asia.
Well, Southeast Asia I find really fascinating, and this really goes back, Norah, to some time I spent in Singapore, in Taiwan and in Korea towards the end of last year. And there's been a secular shift in those nations where the middle class is rising and rising. We've talked so much about the rise of the Chinese middle class consumer over the last 20 years. If you now look at these other Asian markets, you're seeing that happening with aplomb as well. And one of the key things that's so fascinating there is this particular demographic is really hungry for homegrown brands. And they're really hungry for homegrown travel and homegrown experiences. And so that, I think, is a little bit different, where you saw the Chinese consumer hungry for Western brands, right? So I think that shift for local and that shift for regional is a little bit different and provides opportunity.
I know you invest both in public securities and private securities. One could argue that public valuations are maybe too expensive for some people, so they're trying to look for opportunities in private. How do you think about valuations in public versus private, particularly in the tech sector?
I do think that the public market at this point is frothy. I think it's been that way for a while. I think there are some really specific companies that have got great secular tailwinds. I think those are interesting places for tech. But this rising tide has lifted all tech ships has been quite worrying to me for a while. When I look at the private sector, whether it's in tech or it's sort of tech adjacent, industries trying to adopt tech more quickly than before. I've been a long time private investor, and we haven't seen the pace specifically of private equity activity. I think come back quite as much as we thought it would in 2024. That I think in 2025 will change. And I think we're going to see more of a shift towards private market activity. I personally see more value there now than I do in the public markets. And so I think that's an interesting place to play in the next 18 to 24 months.
What sectors are you favoring right now?
I've always been a fan, Norah, of business services. And I've always liked companies that have had really good opportunity to play the outsourcing wave. Now, on Paul's question on tech, the kinds of software businesses I like are outsourced solutions. Whether it's things like Salesforce or Palo Alto Networks, right? These are domain experts using tech to enable companies to outsource their non-core competencies. I like that too in traditional businesses. I like that in terms of things like uniform outsourcing, businesses like Cintas, which have tended to do well, really sort of no matter the macro environment. Those are the kinds of places I've enjoyed looking at.
Now, I also know you were in your notes that you were in Berlin for the World Department Store Summit.
Yeah.
I didn't know there was such a thing, but I'm glad that there is.
Yeah.
And so I guess we're talking retail, the consumer, all that type of stuff. What are some of your takeaways from that event?
You know, it was the energy in Europe was really sad, to be honest, Paul, at that particular time. And Germany in particular, not all parts of Europe obviously are the same. But the European consumer market, domestically, it's been hit by continued inflation, right? We've seen the fact of that in the sense that we've seen more aggressive rate cuts happening from the ECB than we've seen here. We have seen consumer sentiment over there slow down much more dramatically than in other places. And we've seen the absence of the tourists from traditionally core markets like Russia, like the Middle East, like China for Europe. When you look at the consumer, though, again, in other places, and it was fascinating, MasterCard is this really interesting presentation with some great data on where they're seeing international tourist travel and where they're spending their money once they get there. And again, it's the Asian tourists from Korea, from Taiwan, from Malaysia out there spending their money, causing some really interesting patterns in growth. Also from the United Arab Emirates, from Saudi Arabia, from Qatar, you know, the Middle East also, the consumer seems to be very robust at the moment.
How would you compare that to here in the U.S. when we think about consumer activity?
You know, I think the U.S., Norah, I look at that and I never cease to be amazed at how bifurcated the consumer is in the U.S., where you've got the middle class, you know, the sort of upper quartile and beyond of the middle class in the U.S. actually doing very well, right? They've continued to see their net worth increase. They've continued to see asset inflation support their consumer habits. You see that in terms of credit card spending. You see that in terms of certain parts of niche and specialty retail holding up a lot better. Where I actually see a difference this time, you know, if you go look back at prior cycles, places like the dollar stores or the National Visions of the world tended to do really well. And so when we weren't so sure here, it looked like the consumer sentiment was beginning to break at the end of last year. I started to buy those stocks looking at history and saying, oh, I've seen this before. I was wrong, by the way. Those names have actually done very poorly. They're not serving the lower income demographic with the same success as they used to. And I think that just shows how compressed that demographic is. It also shows how their spending habits are changing. And so I do worry that that bifurcation has got implications that haven't yet shaken out in terms of the success of certain kinds of retail here.
How do you think about opportunities just geographically, maybe U.S. versus Europe versus Asia, and obviously different growth rates, probably different valuation parameters. Where are you guys finding the most opportunities these days?
Well, I just also, and this is sort of the bias of coming back from this sort of global tour, I do like businesses that have got really international exposure to some of those markets we've talked about, that high growth parts of the Middle East and Asia, but I do like them where they've got the U.S. halo of quality and transparency and visibility around them. So two areas where I've tried to lean into. One's a little bit more controversial, UPS. I like logistics businesses. We've been in a freight recession. I did buy FedEx on that 15% dip that we saw. And I think UPS, it's one of the world's biggest logistics companies. It does have exposure to a Chinese recovery. It's going through its restructuring. I like that global exposure. And I hope at least that we've come to a bit of a stabilization in the decline of the domestic business we've seen with Amazon compression. It took up the United States Postal Office. The other one I would say, back, Norah, to your question earlier around what am I seeing in terms of different consumer patterns, one thing that is consistent globally about the consumer is they're looking for experiences. They really are leaning into spending more and more experiences, disproportionately more so than stuff. And so a company that I like that's leaning into this is Hilton. Hilton, I think, has got some valuation upside. It's an asset-light business. The Street's upgraded some of its price outlooks. What I like about Hilton is they've really gotten the message on the rise on some of these markets, like Bahrain, for example, like other parts of Asia. And 165 properties opened under the banner in Q2. More is coming. We'll see the full run rate effect of that in 2025. And again, those regional middle-class consumers are hungry to stay at quality properties, and they want to do it locally.
And thank you so much for joining us. Really appreciate it. Love getting your global view and coming back from some of your recent travels. Ann Barry, she's a founder and managing partner at Threadneedle, joining us live here in our Bloomberg Interactive Broker studio.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
All right, Norah, Mulinda sitting in for Alex Steele. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker studio. We're streaming live on YouTube as well. A great Bloomberg Opinion column piece out today by Mr. Tim O'Brien. Trump goes all in on Discord. Will voters follow him? Fascinating question. Tim O'Brien joins us, senior executive editor, Bloomberg Opinion, joins us here in our Bloomberg Interactive Broker studio. The world knows what former President Donald Trump is. He is not going to change for anyone. Will he have the same support that he had over the past several cycles, i.e., 75 million people voting for him? He can count on that, can he?
I think he probably can. I mean, I think, the issue from the beginning has always been that middle swath. I'm saying nothing original here, but independent and moderate voters in the swing states are going to decide who the next president is, I think.
I mean, when we think about Trump supporters, what differences have you seen in terms of those who were rallying behind him in this campaign versus previously? Have you seen more of an influx of individuals that are coming in?
Where really struck me was when I was at the RNC in Milwaukee, and Trump's base hates the media, they hate critics, and it's generally a pretty hostile environment. I've been to other Trump rallies and events. And at the RNC, there was much less of that. They were riding very high at the time because they had arrived. They were no longer the outsiders storming the gates. They have acquired power and are fairly certain how they want to now use it. And so I think there's more a sense of arrival and certainty among his supporters about what they'll do with the mandate he has given them. And I think that, in my perspective, that's a dangerous thing because I think it's a profoundly anti-democratic and intolerant movement.
What's happened to the GOP, the Republican Party that my father grew up with since World War II and that I grew up with? Is that gone forever?
Yeah, I grew up in the Midwest around traditional Republicans, and traditional defined by, I think people who believed in judicial restraint, robust national security, fiscal probity, et cetera, et cetera. And I think those are all wonky bread and butter policy issues that have been replaced by movement, culture issues defined around gender, race, I think avoidance and engagement with the outside world beyond the borders of the United States, and paranoia about the other. And it's proven to be a very effective path to power, so I think it's going to be with us for some time.
I mean, can you speak to what aspects of what Trump stands for speaks to certain pockets of the Republican community, whether that be the affluent and finances?
Well, I mean, I think there are, within both parties, there are multifaceted members of both parties. I think for working class Republicans, Trump is a guardian against demographic and economic changes that they feel threatens their well-being and their standing in the world socially and economically. I think for affluent Republicans, there's always been this idea that taxes wind up being pickpocketing more than anything else because they don't need the help from the government that other members of society do. You can have a debate around the virtues of that argument, but I think that's where they stand. And to a certain extent, I think they're willing to digest anything Trump says or does as long as he does that for them.
So there is some concern there of, I think, some note out there in society that if former President Trump were to win again in this November, how he'll perform, how he'll behave once in office. And there are some concerns and fears about that behavior. How do you think that is as a risk, perhaps?
Well, I mean, I've never believed that Donald Trump is a strategist. I think it's a mistake to have the word strategy in the same sentence as his name. But I think that he is a profoundly emotional and is frankly sensationalistic man, and he prides himself in that kind of emotional connection with his voters. And he's clearly been on a revenge tour. You don't have to be particularly insightful to know what he's planning on doing. He wants to weaponize the Department of Justice and the military against perceived enemies, American citizens, and critics. That is against the Constitution and is against the standards we've all lived with. I think he is intent on doing that. I think he wants to withdraw the U.S. from the world, whether that's in East Asia, in the Middle East, or in Eastern Europe. And I think that poses threats for national security.
Have you noticed any differences in terms of tolerance in this election as we think about the controversy that comes out of rhetoric from Trump? Have you noticed that people have become a bit more tolerant of some of the controversial things that he says than they may have been before?
You know what I think is that this has always been with us. This is a country that was founded in a revolution. We fought a civil war to preserve the unity of the country. We have had all sorts of historical grotesqueries against indigenous peoples, slaves, women, et cetera, and have tried to work those out. It's one of the strengths of the United States is that we've tried to work through those differences. Few countries globally have been able to. But I think all of the animosities and ugly thoughts that attend to those moments have always been with us. And I think the difference in the Trump moment is it's been made transparent by social media, and he's made it okay for us to entertain the worst angels of our nature. And I think that he's challenging us to really examine what the United States is about and where we want to take it.
Tim, thanks so much for joining us.
Thank
really
you.
appreciate it. Tim O'Brien, he's a senior executive editor for Bloomberg Opinion. He's got a wonderful piece out on the Bloomberg terminal today. You can also get it at Bloomberg.com. That's out there as well. As we approach, 15 days till the election. So for some of us, it can't come too soon. I kind of like these shorter periods. It's kind of like a European snap
the last
election.
race.
Yeah, kind of pretty interesting.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Norah Mulinda, she's sitting in for Alex Steele. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. NEF, we love our folks at Bloomberg NEF because they are the team within Bloomberg that tracks and analyzes the energy transition. So they are our go-to folks here. Chris Gadomski joins us here, lead nuclear analyst for BNEF. Hey, Chris, talk to us about nuclear here because I'm seeing your first note here blew me away. For the first time since 2007, there are no nuclear reactors under construction in the U.S. Wow. Talk to us about where we are with that technology, because I feel like it's got to be part of the transition somehow.
Think about a football team or a basketball team, and you're sitting your best player on the bench. There's a lot of issues with regards to nuclear energy, but it is a very, very robust technology that can provide the 24/7 type of baseload power that many customers are looking for and interested in having. We are, for the first time since 2007, without a reactor under construction, which is very, very discouraging, especially in the context of the fact that China has got something like 27, 28 reactors under construction, and Russia is building 22 or 23 reactors around the world in 6 different countries. So what has happened to the U.S. nuclear industry? We've kind of dropped the ball on large reactor construction. And there's a lot of hope and a lot of cheerleading that some of these advanced reactors are being developed by a whole slew of companies will carry the day and provide an alternative nuclear solution.
Talk us through just how long it takes to license and build a lot of these larger reactors.
So the AP1000 that was built in Vogtle at a budget of a cost of $34 billion, it took about 15 years to license and build, and that's quite a long period of time. What utility executive is going to look around and says, listen, let me grab another one of these and spend that type of cash and wait that long, especially since the new technologies, intermittent renewables are coming on, and they provide an alternatives, and there's a lot of change in the utility industry, in the electric power industry, and hence it becomes a pretty risky proposition to place a bet, billions of dollars for a technology that's not going to come and return an investment for several different years. And there's several examples, not only in the U.S., but also in Europe, where this is going on.
How about some of these smaller modular reactors that we hear about? That kind of seems like a reasonable solution to me. I don't have to build this monster, generator. I can do something smaller for maybe, much lower cost, presumably cheaper, all that kind of stuff.
Well, the question is that we anticipate that those reactors may be more expensive on a per kilowatt basis, but the risk that they present to a utility executive deciding to invest this technology is less. You can build them sequentially so that you get a cash flow after the first one is up and running, and then you're building the second one as opposed to waiting the many years to get that. We anticipate that licensing and building an SMR will take about 5 to 6 years, 2 years in the licensing process and 3 or 4 years optimistically for construction. We don't anticipate any of these advanced reactors coming online in North America until 2030.
How does this compare internationally?
Well, the U.S. is a leader in the development of advanced reactors and SMRs. There's only 2 SMRs that operate around the world, one in China, one in Russia, and only 2 under construction, one in China and one in allegedly in Russia. They're supposed to break ground soon. We have a very interesting development in Wyoming with TerraPower developing or replacing a coal plant with an advanced reactor, which is very, very exciting. But they have not received a construction permit for that reactor yet, and they're still doing preliminary work. And we anticipate that coming online, around the 2030s.
What's the feeling within the halls of Congress about this power source? Is there any support for nuclear power, or is it ideologically divided, or where are we on this?
It's certainly changing from being very, very questioning and very, very nervous about it to being more accepting of the technology, because they realize the certain advantages of nuclear power. I live in a solar-powered house in California. I get all of my electricity from solar energy. But when you think about powering a large city or so, you need something more than just intermittent renewables. Renewables are a very good solution for part of the problem, but they're not a solution for the entire problem. So to displace some of the fossil fuel that we see being used now, we need to have a clean, carbon-free source of nuclear power. SMRs have greater flexibility, easier to bring online, and hopefully they'll have a role to play in the future.
Well, let's talk about AI. We think about data centers and the demand there. And when we think about nuclear supplying these data centers, I know you mentioned that this should be pretty much a post-2030 phenomenon, apart from the revival of 3 Mile Island by 2028. Can you talk a bit more about that?
Yes, there are several studies that suggest that there's a tremendous demand growth for nuclear power between now and 2030. There is some questionings, will that growth continue after 2030, or will it plateau for a while? I wish I could say that there'll be a solution from the advanced nuclear community before 2030, but if it is, it's just going to be first of a kind, 1 or 2 reactors. And the challenge is developing a supply chain that can deliver a fleet of these advanced reactors to really respond to the growing demand for electricity from the data centers.
Hi, Chris. Thank you so much for joining us. Chris Gadomski, he is the lead nuclear analyst for BNEF. BNF, they are the team within Bloomberg that tracks and analyzes the energy transition. They do great work. They have extraordinary data, a lot of proprietary data for the BNEF folks as well.
This is the Bloomberg Intelligence Podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live each weekday, 10 a.m. to noon Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.